Well, I want to think about exchange rates again today. I want to think about, what the exchange rate should be or where that exchange rate might be headed. And I want to think about it in the context of our good friend Bitcoin. Yeah, exactly. I want to know how much is this thing actually worth? We've seen the charts, right? This thing is on a tear, trading at over $55,000 per coin as of this morning. This is a standard chart. We could also see this kind of in a logarithmic scale, makes it a little bit easier to see what's going on here. But this thing is worth a ton and seems to be growing like crazy despite its volatility. So one thing we can do is look at purchasing power parity. So we look at the price of an item or a basket of items in one country and compare it to the price of an item or a basket of items in another country. So can we do that for Bitcoin? Well, it turns out we can't really do that because there's no Bitcoin country. There is just Bitcoin, right? There is no actual country. So every country has an exchange rate with Bitcoin, but there's no basket we can do because there's no Bitcoin country. So this doesn't really work for Bitcoin. Now, I do have a video that describes purchasing power parity in more detail. You can check it out if you follow this link right here. Now, of course, I did another video where I talk about the Big Mac index, which is just really kind of a fun play on purchasing power parity. Again, it doesn't tell us about anything because there are no McDonald's in the Bitcoin country because the Bitcoin country doesn't exist. You can check out a video that further describes the Big Mac index by following that link right there. Now, another thing we could do is look at interest rate parity. Basically, this says we can create an arbitrage between two currencies based on how much interest you get in one country versus the other. And in this case, Bitcoin actually does have a deposit rate. So depending on how many Bitcoin you have, you can earn up to 8.6% on that deposit. Now, this is how it might work. You can pause it if you need to go through this. But the long and short of it is that the currencies with the higher interest rates on deposits should depreciate against currencies that have lower interest rates. So here at 8.6, Bitcoin is one of the best yielding currencies out there. So this would tell us that Bitcoin should be slowly but surely declining in value due to this interest rate parity. Now, you might want to actually look at this. There could be a pretty tremendous arbitrage opportunity here, given what we're actually seeing with Bitcoin prices. Now, if you want to see a further explanation of what's going on with interest rate parity, check out that link right there. Finally, balance of payments should tell us something about what's going on with a currency. If you want to see some videos on what balance of payments are, you can check out these videos here. Ultimately, what we're talking about here is that supply and demand for goods and services creates supply and demand for currencies, which subsequently moves exchange rates. Okay, that's the whole idea with the balance of payments theory to describe what exchange rate should be. You can see a full video if you follow that link right here. So this is a strange asset because in general, it doesn't seem like Bitcoin really falls into these theoretical buckets where we could come up with the value. So let's treat it like an actual asset. So one of the things we could do there is have a dividend discount model, but Bitcoin is not a company. It does not provide dividends. It does not earn anything. So it actually has zero future cash flows associated with it. And no matter what exchange rate or no matter what discount rate you use, if you discount zero, you're going to end up with zero. So that would imply that Bitcoin is worth exactly zero because there are no cash flows associated with it. Now, one other thing we should consider is that the actual process of mining Bitcoins requires a lot of electricity. In fact, just Bitcoin mining uses 0.34% of the global electricity usage, right? So that is a cost. It costs money to use electricity. So that would imply a negative cash flow associated with Bitcoin. If you think about the whole platform of Bitcoin, it's also worth noting that there is a pretty big carbon footprint associated with that electricity usage. It's about the same as the emissions that 1.8 million cars produce annually. So keep that in mind for Bitcoin. And if we use that dividend discount model to apply it to the negative outflow of money to pay for the electricity, then the predicted net present value of Bitcoin should actually be negative. I've said it before, I'll say it again. I think ultimately Bitcoin is worthless. The only reason it has value is because someone agrees to let it have value. As soon as that breaks down, we could at someday see this thing just ultimately be zero and just kind of something that was there as a nice experiment. Anyway, thanks so much for listening. I hope you enjoyed that.